Hey everybody, welcome to Trading Capital Exclusive Analysis. In today's video we're going to be discussing natural gas, oil, and Apple. There's a couple interesting charts and things we need to discuss. Looking at the price action of natural gas, overall it has been a pretty horrible sell-off in natural gas from the 19th of May all the way down to the low. But to put this pattern into perspective, this is just a lower boundary accumulation range, and buying at these depressed levels again is likely more of a better risk to reward scenario, being the fact that we're at the low end of the range and you've been defended once, twice, three times, four times, and likely a fifth time here, making a potential higher low. The pattern does favor more upside on the longer term chart, and I still think a move to $3 is very, very likely. It's very bullish that we're managing to hold this downsloping trend line. That's kind of where you broke out, had a big sell-off, failed back below that level, and now you've recaptured it. So you had a bullish pattern which failed, turned bearish slightly with this bearish close, and now that bearish close has turned into a bullish close, being the fact that you're back above that. So you do have to lean more to the bullish side, considering you still have this big support level underneath you. And on the weekly and monthly chart, this pattern is still technically okay. So I still anticipate further upside in natural gas. Looking at some of the stocks like AR did see a pretty big reversal, obviously with the S&P and Russell weakness that was in the market, but it was interesting to see that nat gas was positive by a great degree, but the actual energy stocks were negative. And this is just due to the energy complex. I mean, if you look at why we have to group in the energy stocks sometimes like natural gas stocks with oil, is because oil had that announcements from the Saudis saying that they're prepared to cut production again. Oil gapped up, markets did not believe it, and it sold right back off and went negative. So that's something that we have to pay attention to, because it did hit the XLE energy sector as a whole with a pretty big epic reversal, specifically in some individual names as well. And that's one of the reasons why natural gas stocks sold off today, was simply because the energy complex was negative, just due to the big reversal that transpired in the oil market on that announcement from the Saudis. Now, if we move along, Apple had its conference today, released a couple new products, upgrades of chips, but overall the big talking point was, if we look at the VR goggles, the augmented reality goggles that actually last only up to about 2 hours. They have a battery pack, and you have to strap this to your face. So it was very interesting to hear that early on in their investor conference meeting, Apple was basically touting how bad the blue light can be, and staring at closed screens, that they've actually created this feature that can basically zoom out and make the screen appear a little bit farther than what it appears. And then at the end of the conference, they slap you with this augmented reality that's right to your face. And let me be clear, a lot of companies have tried this already, Meta, Google, Microsoft, and it's failed. So we'll have to see if Apple can do it. Apple's really a company that if anyone can do it, it is Apple. But ultimately, I don't think there's much traction with these augmented reality goggles, slapping them to your face, unless you're in some sort of a simulated gaming industry. I think it's a bit of a stretch to get households to really implement this at this point in time. Not saying it can't work, but it's definitely seems like it would be a little bit of a stretch. And if you look at how the stock reacted, made a new all-time high and then sold off on heavy volume, that is not a good candle formation, considering that you did make that new nominal all-time high when you made during the QE artificial low rates environment, and basically that was met with extreme selling. And it makes sense. I mean, even if you look at this on a weekly chart, the parabolic move in nature that you've had on the weekly chart, look how extended you are away from the 20-week moving average. We're talking about a move all the way up to the 180s. The moving average is at 162. We're still at 179. A pullback even down to this level, 162, is something that could transpire, and would likely mean that Apple's uptrend still hasn't broken yet. You could have a pretty deep pullback in this mega cap, and it doesn't mean that it's that the market or that Apple is basically going to make new lows. So ultimately, the market did not like it, and when you factor in how much volume we're trading up into basically now this all-time high period, I mean, look at these 3 weeks of volume. That is some epic volume, way more than anything that we've really traded going up into that area. So you would assume a pullback is the likely outcome, and that's what we actually got today. On that note, thank you all for tuning in. Please give this video a big like down below. My content has been a little bit more infrequent as I am in the process of a move. relocating my studio, relocating my house, and definitely looking to upgrade some things. But at this point in time, the move will only be completed July 1 or near the first week of July. So just be patient. The content will be coming back fast and furious. There's a couple new courses that I am taking at the same time as well. But nonetheless, I am still trading and will definitely be focusing on my content production once my new studio is set up. Thank you all. Good luck, and we'll see you on the charts tomorrow.